Welcome back to TLT Talks. We got a good one for you today. Today, we are going to be talking about money. It's actually funny. Over the 10 years that I've been studying psychology and finance, etc., I find that it's very interesting people's relationship with money. Some people think that money is the future. Some people think money is evil. We got a great guest with us today. Through how to build your money machine. Here we go. President of Profolio, John, my man. How's it going?
How's it going, brother? How are you?
Excellent. So I was just saying we're here to talk about money today, right? And so I find that people's relationship with money can be interesting, right? Some people will go down the road of money is evil. Some people are money is everything. Myself, and I imagine you, money's a vehicle, right? It's just a means to an end. But I find that people's relationship with money tend to dictate, how successful they are with it. And I'm gonna be honest with you folks. I'm gonna tell y'all a little secret that maybe you didn't know, that if you want to plan for your future, I probably wouldn't rely on Social Security. I don't think in the later part of our lives that's gonna be a really dependable thing to rely on. So today we're gonna talk about money. I have with me John, who's the president of the Profolio Group. They're a New York-based firm. They focus on financial planning, investments, retirement. They have a real big focus on technology. John, you want to give us a little intro, where you are, who you are, where you're from, etc.?
Yeah, absolutely. I've worked in the industry for the last 13 years. I spent the majority of that time at Fidelity Investments, went over to the startup Betterment to help them build out their 401k platform. And then a few years ago, I just decided that, there was more meaningful work that I could be doing. And so I started the firm to really focus on, disruptive innovation, some of the emerging technologies, and really, focus on financial planning and building wealth and the conversation that we're going to have right now, diving in deep with clients.
Amazing. So actually, I have an asset to share with our folks. But now that I have you on in the way that I wanted to share it, it's not allowing me to do it. So, damn, Instagram.
That's how it always happens. Technology. That's it.
Come on, Instagram. We tested it prior, but I said, I wonder, can we share it if we have a guest on? And I guess the answer is no. All right, cool. So here's what we're going to do.
Let me hop off. You share it, and then I'll jump right back in.
Okay, we can do that. That's a good idea. Thank you. Appreciate it.
Absolutely.
There we go. Oh man, Instagram, get your game up. You're gonna let me use a photo, but only by myself. I don't want to go by myself. So here, look. Today we're going to talk about money. We're going to talk about how to build wealth, right? And so it's not going to be Social Security for most people. It's not going to be your daytime job either. Most people that are of massive financial wealth, whether that means $100,000 or hundreds of millions of dollars, those people did not get there from their day-to-day income. They got there from what they do with their day-to-day income. So this is an asset that I put together. Let's see if this works. Here we go. There we go. Can you all see that? I know it's a little small. I did test it. Instagram won't let me make it bigger. Instagram, I know you're listening. Get your game up. But here's this is the model we're going to go through. This is what I teach all of the people on my team. This is what I talk to when we're having financial conversations. This is an asset and a financial technology, if you will, that's really strong. So if you are in business for yourself, right, meaning you are 1099, you're not W-2, then this first step is really important for you. If you are a W-2, this first step isn't quite as relative, because the first thing that we're going to talk about is taxes, right? If you're like me, or like I used to be, I should say, and you're a 1099, then you do what you need to do throughout the year. All of a sudden it's March, April, you got to do your taxes, you go and you file your return, and the accountant will tell you, okay, cool, you got to write a check for this amount. You're like, well, I don't have that anymore. That was like last year when I made that money. And so that was my life for many years, and obviously that's not the case today. But the first and most important bucket, right, we're going to focus on 3 buckets, right? The first and most important bucket is this tax bucket. Now, what do I mean by bucket? Every single week or every other week or every 30 days or whatever it is, you get paid, right? If you're a 1099, you have commissions or you have dividends or you have some form of compensation, and currently all of it goes to you. And what we want to establish is a pattern, a flow from that main account to others for the purpose of offense and defense of money. So let's use an easy example. Let's say that you get $1,000 a week as an example, right? The first bucket that you want to formulate is your tax bucket, right? If you are a 1099, then taxes are not withdrawn from your income like it is with a W-2. And so the very first thing you want to do is you want to set up some sort of automation that every time $1,000 hits your bank account, the recommended percentage is anywhere from 10 to 20%, right? If you're in business for yourself, you'll know that you have a top line, your revenue, there are some expenses, and then you have a bottom line or your net profit. So you want to take 10 to 20% off of your top line, right? And I'll explain later why this is really important. You want to take 10 to 20% off of your top line of your revenue or the commission that comes in before expenses are factored in. So again, if it's $1,000, the recommended amount is 10 to 20% off the top line or the revenue. And you can automate this. You know, anywhere you have direct deposit, you can usually dictate to the vendor or the person that is sending you this money to say, hey, look, do me a favor, give me 90% in this account and 10% in this account, or 80-20, which is the recommended model. If automation is not available, fine. Then just have a plan where once a week or once a month or once a 2 weeks or every day, whatever it is, that as soon as it comes in, you have a process by which you take 10 or 20% off the top and you set this aside. They have no choice because that's taxes. You have to pay taxes. And so doing that process, that's a defensive move. And so you'll never find yourself in a position where you owe money for taxes and you don't have it, which anyone that's in business for themselves, you know that in the beginning, that's happened to you at one point or another. The second defensive move, which is this bucket to the left, is called dry powder. So dry powder is your defense, it's your safety net. Right now, if you're W-2 or 1099, it doesn't really matter here, because if you're in business for yourself, you want to be setting aside dry powder. And dry powder is basically savings. Savings you don't touch, right? You want to be setting aside dry powder for the business and also dry powder for your personal life. So in a nutshell, if you take a look at what the business expenses are over the course of 1 month, in an ideal scenario, you want to have somewhere between 3 months to 6 months of dry powder for the business. So if your expense sheet, if you run about $5,000 a month in expenses, you want to have, 15 to 30 grand set aside, because whatever business you're in, however great things may be right now, there could be a day where the market shifts or a key employee leaves or something happens where the business is in jeopardy, a new competitor opens, whatever, and all of a sudden your cash flow is compromised. And, if you don't have this dry powder, it is a very scary time. I've went through this in my business, and now I have 6 months of dry powder and that money's not touched. And it makes me feel invincible, because no matter what happens in my business, I know I've got 6 months of life. If I made $0 for 6 months, the business can survive, right? You want to do the same for your personal life. So if your personal life, rent, the basics, right? Rent, car payments, student, whatever, all the basic payments, if, you want to get 3 to 6 months of that as well. 3 to 6 months of that as well. And that gives you a similar feeling in your personal life. Again, now whether you're W-2 or 1099, for the personal dry powder, it doesn't matter, because you could get laid off, you could get fired, there could be a competitor that opens, you can get sick. I mean, there's a million what ifs. And so again, if you are a business owner, it is paramount to have 3 to 6 months of dry powder set aside for the business. And if, regardless of whether you're a business owner or not, life happens. So you want to have 3 to 6 months of personal dry powder set aside as well. Now, again, it is really important to automate this, right? Again, all of your accounts, you can do automatic withdrawals, you can do automatic wires, automatic quick pay, automatic ACH. There is a myriad of ways to set this up automatically. The percentage probability, the percentage chance of you doing this consistently, if it's automated or not, is like 10x, right? If this is set up to be on automation, like a machine, it's a very high likelihood that it just feeds itself. But if you have to do it every week, things come up, you get busy, oh man, I don't have enough money this month, it just, when you don't automate it, the percentage chance of success here goes down significantly, right? So those are our defensive buckets. Bucket number one, take care of the taxes, right? Make sure you're putting aside for taxes so that whenever that tax bill comes, you're ready, you have the money, you're good. You should be doing it quarterly if you can, but if not, fine, do it annually, whatever. But set aside money for quarterly, meaning your taxes. You should be setting aside money for taxes. That dry powder, right? Again, you want to make sure that you're defensive. For anybody that's into sports, defense wins championships, right? And a strong defense creates a great offense. So taxes, dry powder. Make sure that you're in a defensive position so that you're prepared. Nothing can hurt you. You're prepared. You're gone. Once you got all your defense set up, now you can play some offense, right? And with offense, this is something that I like to call a self-imposed savings tax. So let me ask you this question. If the government came out right now and said, you know what, your tax bracket is X, as an example, taxes are going up 20%, what would you do? I mean, sure, we'd all bitch and moan and groan, whatever, but eventually it is what it is. And you just have to figure out how to live on less money. That's just what life becomes. For those people that understand this distinction, the savings tax distinction, here's what happens. Number one, you really set yourself up for the future. And 20, 30 years down the road, you're made. You got it made. Number two, it sounds scary. It sounds like, oh my God, well, you know, I might not have this, so that's so much money. It sounds like it. But I can assure you that myself and anyone that's ever done this will tell you that once you implement this, your lifestyle actually doesn't really change. You just look at money a little bit differently. But I've been doing this, I've been doing 20%, that's my number. And I've been doing this number for nearly 3 years now. And I still travel plenty. I go out plenty. I do plenty. You know, like nothing in my life is lesser than. And what the savings tax means is that whatever your income is, you're going to take that percentage and you're going to put it aside for savings, right? And so that's our third bucket here. So if you look straight down, we had savings account 1, and that should be its own account, and that is your taxes. We've got to the left there, or maybe to your right, the dry powder bucket, right? And that's a separate account. That's, you know, and the personal and the business should be separate accounts too. And then we've got this bigger bucket, the savings account, and that's your offense. From there, from that bucket, that's where you invest into your stocks, your bonds, your crypto, your real estate, your wherever else. That's where you go and play offense. That's where you want to see return on your money. And I'm going to get John back here. John, if you could jump back on, I'd love for John to chime in with any feedback he might have about this whole process. And then obviously, you know, tap into his expertise around where are the best investments to make. I do want to finish with this. One thing, right? Remember how I said I'll come back to this first bucket in a minute. And here's what's really cool about that first bucket. So if you're putting away 10 to 20% of the top line, chances are that the tax liability at the end of the year will be far smaller than that. Because if you're putting away 10 to 20% of the top line, your tax liability is based on net profit. And so what will ultimately happen is there'll be a gap. So let's say, for example, over the course of the year, you put $100,000 into this because it's 10 or 20% of the top line, right? When the taxes come, they'll probably only be half of that, or 3/4 of that, or a quarter of that, depending on how you do your taxes. What's left over? Pardon my French Instagram, that's your fuck you money. That's your guilt-free, do whatever you want, take a crazy trip, throw a carnival for the family, buy a watch, buy a car. That's your guilt-free whatever you want money, because you're playing defense in both the dry powder and the tax part. You've done your savings tax and you've got all of your investments. So that money that's left over in that tax bucket, whatever's left over, that's your guilt-free, do whatever you want money. And here's what's cool. Once this gets into momentum, probably what you'll do is feed that offense bucket, because now it becomes a game. Now it becomes fun. So that's the process. I wanted to give that foundation. John, anything you want to jump in with, do's and don'ts, feedback, anything you want to jump in with?
I love it. You know, so I think that everybody's blueprint is going to look a little bit different, right? You mentioned, you know, W-2 versus 1099. And I think the beauty of it is that that's fine, right? Everyone, as long as you're checking the emergency fund, you know, whether you're a business owner or someone who just wants to make sure that if you lose your job, you know, you have 6 months of expenses set. It's that discipline of, you know, you mentioned automation. I love it, right? I think automation is the key. But if you have those principles where 20% before you start spending, before you start paying bills is going to you, and you're filling those buckets, the result is inevitable. You know, it does the minor nuance is totally up to your situation. But I think what you touched on, just automation, discipline, and getting that machine in motion is what it comes down to. And that's what people have the biggest struggle with is getting those wheels turning, you know,
That's
putting
right.
the plan in place, setting those numbers up, getting the automatic deposits in. And that's where people really struggle.
That's right. Yeah, people really procrastinate. And my experience has been, you know, I do for those agents on our team, we teach real estate, but honestly, real estate tends to be the last thing we teach. We really teach mindset. We really teach business acumen. We really teach optics, triggers, organization. And this piece, you know, I did a full 1-day seminar for the team internal in this piece, and for, you know, for my agents, I really like when I do my performance review with them once a month. I really push them, like, what are you doing around your money machine, or how much you putting away? Like, it's part of the conversation. For all of you guys watching, do not be all or nothing. So let's say you can't do 10, 20%, do one, do two, start somewhere. Just get the flywheel going, get momentum going. It's like if you haven't been to the gym and you think about going 7 times a week, it might be overwhelming. Man, just walk in, do 3 sets.
Show up.
You just show up. That's it. So just do something. Just do something to get in action. And I promise you, it becomes a game. It becomes like you start to ramp up so fast.
Yeah, and that's the battle. The battle is that people are so scared to look in the closet and see like what's going on with their money machine that they prolong some of those key changes. You know, it's you know, and to segue to more personal finance, right? You know, I talk to people all the time who aren't even contributing enough to get their employer match,
right?
You know, and there's certain things that are total game changers that you can do in one day and automate and set up that'll have lasting effects. You know, so I think it's really just showing up to the gym is the hardest part.
Yeah, for sure.
But once people do that, once people look and see where their budget stands and how much they need for expenses, you know, it sets those wheels in motion. And 3 years later, you're looking back at contributing 20% across the board and saving in these buckets. And it's because of those small decisions that you made.
Yeah, man, for sure. And what's crazy, like 3 years in the grand scheme of our lives is kind of nothing. What is it going to look like in 30 years? Like, man, if you could only do $100 a month, that's all you could do. Fine, do that for 30 years. You know, like even that, it's you know, or if it's 1,000 or 10,000, you know, again, whatever the number is, just get going. So that's the structural or the logistical part. Again, the success in large part lies with automation. If you guys, John, how can people find you? Because I know you set people over this all the time. Someone wanted to talk to you to like set this up. How do they find you?
There's a link right in my bio to schedule some time on my calendar.
Amazing.
I do, you know, free consultations. A lot of my day is spent having these conversations around financial plans and putting a plan in place. And, you know, I think people think of this as this overwhelming, you know, set of tasks. And it's really just figuring out how much we need to set aside and setting that up. So it's a game changer. So these are the kind of conversations that I have all the time. And you can jump right into my calendar.
Yeah, beautiful. Thank you for that. So again, if you guys want to have a chat with me, that's cool. If you want to have a chat with John, that's cool. But do something, man. Like, or just go off and just do it. Like, just go off and just do it. But if we think about this, like for those that might be stuck or challenged, this is silly. This is meant to be silly. But like, just think about it. Once upon a time, you couldn't walk. Once upon a time, you were a crawler and you try to get up and walk, and it was really hard, and you didn't get it from the first time. And imagine you're like, you know what? I'm good. I'm just gonna crawl my whole life. You know, like, so this is the same thing. If it feels a little challenging, fine. It's only like that for a little bit. You'll spend some hours, you'll have a couple chats, and then the rest of this is like, listen, man, there's nothing distantly special about me. I didn't go to Harvard. I didn't go to Yale. I was like, I just took some time. I spent a couple hours, I had some conversations.
Right.
I started very small, and now it's a machine. So let's talk about offense. Right, John? Like, so let's say somebody started doing this.
Yeah.
Can you talk about some of the, go for it.
Before we transition, I just want to touch on, you know, I spend a lot of time talking to Sarah and you as well. And the one thing that I've noticed for years is that you have a consistent process of reviewing the data. Right. And I think that's one of the things that makes your team very strong is that you're always in a pretty good state. You know where business lies, you know where the finances lie.
Right.
And I think as you look at the landscape in financial planning, you know, only about 30% of people have a financial plan on file. Wow. Right. And that includes like pen to paper budget planning, you know, so if less than 1 in 3 people even know where their finances stand, it's very difficult to assume that they're going to make any changes. And so a lot of times when I sit down with someone, that's the first thing is saying, let's grab some paper. Let's figure out, you know, what does it cost you to make it through a month? Right. Because once you have that number, most of the other numbers work themselves out. So I think I would encourage people, a lot of times they're scared to look at the state of their finances. It's the most important step you can make.
You know what, man? I'm really glad you said that, because in my passion or desire to deliver the investment stuff, I totally overlooked that point. And you're totally right. And I was one of those people. Listen, a lot of times the changes we make aren't because we're so wonderful, we're forced. And so my business fell into a heap of trouble a couple of years ago. I was upside down 50 grand a month. And I, for the life of me, could not figure out where the money was going, because I didn't have books and budgets and bookkeeping, whatever. So like, I don't want to sit here all high and mighty, like, oh, I had an idea and I went out and learned all this. I learned this stuff out of sheer necessity, because I was drowning. My business was dying, like, and now today it's like super healthy, and I know everything is, it's right to your point. And like, it's like if I'm in a car, or better example, if I'm a fighter jet pilot, I'm in a plane, I got all these dials and levers. Now my business and my personal life has all that. So it can't go from successful to unsuccessful. I have so many alarms everywhere and so many optics everywhere that like it would take, I don't know, something crazy for things to like turn around dramatically. I would have to mess it up. I'd have to make a poor choice, over leverage, at this point. Thank you for saying that's really important, is have your optics in place, like have bookkeeping, budget, something to know what's going on. And you're right, man. So many people, there's several people on my team that I've brought this to, and they're like, I just don't want to focus on it right now. And when I get to the real, they just don't want to know. They don't want to know what it actually looks like,
Which is mind-boggling, because at some point you're going to be forced to make those changes anyway. It's either you get ahead of it and do it today.
That's right.
And so I think that's the biggest hurdle. And then you deal with, so many, you have couples where one person's a planner and the other one's not. There's so many variables. But I
have no idea what that's like.
I think the most important thing you can do is even just think about having that internal dialogue with yourself around where's the fat that I can trim to make sure that at the end of the month I'm paying future me 20%, whether it's in emergency funds and defense, offense. It's just, you have to be the first person that your financial system pays.
So smart, man. And the truth is, once you have the optics, chances are in personal and in business, you'll overspend it. Like, it's so easy to jump in Uber. It's so easy to get on Seamless. Like, truthfully, when you go to dinner, do you look at the price of the entree? If it's like $12 or $17 or $20? And it's so easy for that stuff to get out of control, man. Like, anyways, thank you for bringing that to my attention. It's a really, really important point. Let's give the folks something exciting, because all this for most people is like boring, oh, man. Give them like what's like, so now you're saving, now you're going offense. What are some of the type of investments?
Right. So the most important thing is the emergency fund, right? That needs to be, whether you say 3 months or 6 months, if you're more conservative, whatever your initial goal is, that's the first thing that you need to fill. So that's 6 months, whether it's business expenses or personal expenses, needs to be filled. Once that's done, you can start thinking about the fun stuff, right? So especially in this market where the tide is changing so quickly, diversification is so important, right? So understanding where you want to be from a risk perspective in that money that's playing offense, because I have clients who are a decade into retirement, and I have clients who are 30 years out from retirement, and the amount of risk that they're willing to take drastically different, right? So the first thing is really understanding, like, what can you handle in the market? If you are wildly ambitious in the crypto space, but also can't afford to see 20% moves in the market, probably not a space you should be invested in.
Right.
And I think that we're seeing this, the market is so scattered and really, this year is going to go down as one of the ones where they study for years to come, because the movement from asset classes, the transition from US to international, there's so much going on. And so the best thing that you can do is protect yourself by being diversified. And I think that's where a lot of people are struggling right now is, they spent last year making a ton of money. I love crypto, love some of these high tech names, and and now they're realizing that as quick as they rallied, they can fall, right? So I think it's important to understand, what are you comfortable with? If there's a bad day in the market, does that scare you away? And if so, how do you protect that and hedge that? Before you even start looking at, should I own this company versus this company? It's how much individual stock should I own? How should I be using diversified funds or ETFs because I know that I can't, personally, I don't really enjoy day trading.
Right.
I think that from an emotional standpoint, to me, I'd rather diversify and have more skin in different games. So I think that that's the first conversation is once you understand what you have to be saving, then from a perspective of risk tolerance, start looking at, what asset classes, how much speculation should I be taking on? And then, of course, we can move into some of the more fun conversations about some of the exciting stuff going on in the market. But I think that people usually, when I have conversations with people, they tend to focus on the investment side first, right? Everyone's conversation, usually, most people start with, I want to buy this company, or what do you think of this stock?
Right. I want this percent return. Yeah.
I'm chasing this crypto and they're building this, and I think that should really be the last thing that you're thinking about. It should be saving, contribution rates, taxes, risk tolerance, and then what fits into those buckets. So I like the way that you laid that out because, you really, what goes into that smaller bucket as far as the name or crypto, etc., that's kind of the least important.
Yeah,
in the overall view.
And let me just say this: by establishing these percentages to each of these buckets, it's just a discipline now. It's now you don't have to agonize each week over the decision. And the last percentage decision I think there is to make, totally based on what you just said, and there's tolerance for that financial bucket, that last big bucket, that's the offense one. If you're setting up your bucket, just decide about your percentage of risk versus safe. Maybe you're 50-50. I tend to be like 70-30 risk, but I'm younger. I've got good cash flow, and so I can afford to take some risk. And I'm tested. I know I'm risk averse. So Mike Tyson had a line, right? Everyone's got a plan to get punched in the face.
Yeah.
Investing is the same. Everyone says they're risk averse, but then you watch your money go down 20, 30, 40, 50%. Can you hang in there? Can you not panic? So I've had, especially being in the crypto space for like 3 years. So I know I've been tested,
Yeah, I was going to say, and I think, the crypto space is interesting right now because everyone loved it last year, but I think people have kind of shied away right now.
That's right.
Which is counterintuitive because it's on sale now, in my opinion.
That's right.
And I think that there is this sentiment for momentum today that people should be focusing on the types of companies that they're interested in and the types of projects in crypto. And so I think there's this really unique opportunity where we know that the market is moving and trending higher. There are entire asset classes that have sold off purely for momentum. So I think that it's a good time to reevaluate and look at what you believe in. And, if it's crypto, there are a ton of exciting projects that maybe have fallen out of favor. But if you have that disciplined, systematic deposit going in every week, regardless of what the market's doing,
that's right.
And if there are names that you believe in, you should still be buying, and that's the way to do it.
Yeah, like if you think about, let's say you don't even go into individual companies, right? Like let's go back to the stock market, for example. If you just invest 3% of your money, 3% of all of your income into the stock market for the next 30 years, like losing's impossible. It's not like we have to have a total financial collapse. Right, it's just not possible. So then you could go down the road of opportunity to cost, right? Well, if I invested here versus somewhere else, and now you're getting now that becomes a little bit advanced. But yeah, look. So as we're over time here. I love this conversation because I'm so passionate and excited. And for me, even real estate, what I love most about real estate is that it's a vehicle to help people reach their financial dreams down the road. That's what I love most about real estate.
Right.
So again, let's circle back to the beginning. Number one. If you're interested in that asset, please DM us. We're happy to get you that. There's no cost, no fees, or nothing. I'm really excited always about giving back and paying forward all the things that I've learned. So if you're interested in that asset, that bucket asset, feel free to reach out. If you want some time with myself or John, feel free to reach out. Just remember, discipline the 3 buckets, right? The tax bucket, 10 to 20% of your total revenue, right? And remember that at the end of the year, when you pay taxes, what you'll pay off, there'll be a delta. And that's your fuck you money. You'll get to do some fun at the end of the year or next year. There's the dry powder, right? Your emergency fund for business and personal. And those 2 buckets, that's your defense. When you've got defense in place, you feel very confident about going on offense. And if you do take a little bit of a hit on offense, you're not going to care because you've got your defense set up. It's going to make you less scared to take on risk and potentially do some bigger reward things. Then you got your savings tax, right? And so that goes into that investment bucket, and you should be working with a professional. You know, like, I mean, I have somebody that I work with. John and I work together a little bit. Like, you know, so you shouldn't be trying to do this on your own. The 1% or whatever the cost is to have a professional do it is 100% worth it. There's a line that I always use for my business. Someone says, you know, I'm going to try to list my house for my sale by myself for sale by owner. So my line is always like, listen, first of all, if someone's doing this all day, but really, if you think it's expensive to hire a professional, wait till you hire an amateur. So if you're an amateur, if you're not doing this professionally, you might not even be an amateur. You might got to do some work to get to amateur level. So you should be working with someone. John, any final tips, anything really exciting, anything you're looking at that you're suggesting to clients, any tips?
Yeah, I think the biggest tip right now is that long-term outlook always wins out. You know, people are so focused on week to week, but more millionaires are created in this country through their 401k, and there's a reason for that, because long-term systematic disciplined savings always wins.
Right.
So anyone who wants help with that, please reach out. I'm
Awesome.
more than happy to help.
Awesome. The Navy SEALs have a line: slow is smooth and smooth is fast. I'm going to be 38 in a few months, which is like 40 is like around the corner.
You got some time, man. So don't do that to yourself.
No, but I'm excited. My 20s are cool. My 30s have been amazing. I expect my 40s to be even better. And I've laid some good foundation over this decade. But my point is, like, you know, when I was younger, everything was about now.
Yeah.
And Tony Robbins often uses this line of, we overestimate what we do in a day, but we underestimate what we could do in a decade. And I like all the things I did when I was younger, these like big blockbuster things I tried to do. I'm like, damn, if all I did was this from the time I was 22 or 23 years old, oh my God, where would I be now?
Yeah.
So
I just want to say, $500 compounded for 30 years, $500 a month compounded for 30 years is $1 million balance.
There you go.
So if you can do $500 a month, you can turn into a millionaire.
There you go.
Very easy.
There you go. So gang, anyone that's watching this, look, if you're in the crypto space, I agree, by the way. Me personally, I think Ethereum is the way to go. I'm stocking up on Ethereum. I love Ethereum. What's that?
I love crypto.
Yeah, it's
just love the projects going on in the crypto space are incredible. It's, I mean, best and brightest working on the world's problems.
Yeah.
You know, how can you bet against them?
I agree. So I wouldn't go and put, you know, let's say of my savings bucket, I wouldn't go dump 100% into crypto, obviously.
Right.
But I equally wouldn't dump 100% into the S&P or the NASDAQ. You know, like you want, as you said, you want to diversify. Anyways, I could do this.
The way I look at crypto is, you know, this will either be the biggest thing in our lifetime and you want to have some skin in the game, or it goes to zero and hopefully you didn't have too much skin in the game.
That's right.
You know, and I think we both know it's not going to go to zero, but I agree, right? However you would treat gold, however you would treat any kind of hedge, you need to have some skin in the game.
That's right. I agree. Some exposure. Then how much exposure is ultimately up to you, but some exposure. Anyways, man, I could literally do this for like hours. I could literally do this for hours. John, thank you so much for jumping on. Again, anyone want to find John, look at his bio. Or if you can't get to, reach out to me, I'll connect you. And then any questions about this, guys, please, you don't got to do everything. Just do something. Please do me a favor.
Yeah.
Make me feel like we contributed to you. Just do something. Open one of the accounts. Do something to move yourself forward, because the future you will really thank you for it.
Absolutely.
John, have a good one, my man.
Always a pleasure, man. Always a pleasure, brother.
Likewise. Take care, guys.
Bye-bye.